First, Casey, let me once again congratulate you on closing deal number 8 last week. That is awesome. We are so happy for you here at One Rental at a Time. I do want to acknowledge that the 30-year mortgage rate for homeowners is just ticked above 7. I do believe that that means investor loans could be over 8. I want to talk about interest rates, what I think that's going to do to inventory, why it is so hard on home buyers today, and then frankly, why rates don't matter to me. You ready to have this conversation?
Heck yes.
There you go. So let's talk about homeowners first. Homeowners today, especially first-time home buyers, it's rough. Affordability is at or near lifetime lows. I think 2000, there might have been a year that was worse, like 1981, but not many. It's pretty low and getting worse. Add on top of that, inventory being near low and new inventory going down 20% from last year. It is rough out there for home buyers today. Would that be fair to say?
It's everything that's been happening in the past year leading up to this or a few years is detrimental, in my opinion, to the housing market with home buyers, college graduates wanting to buy a house, people wanting to move up, just the whole experience of buying houses as a whole. It gives me the goosebumps and not a good way. I feel like we're in a lot of trouble, like into the future with home buying.
Yeah, there's been a talk track for years about this thing called Renter Nation, which I did not put a lot of thought in because again, home ownership rates have traditionally bounced between 63 and 67%. I have data all the way back to 1970. But I got to tell you, with rates once again spiking over 7% and affordability being so low, transactions are going to crash, inventory is going to build, days on market are going to build. It's because we have terrible supply and now terrible demand. Because let's be clear, homeowners, first-time home buyers are a large part of the market. Move-up buyers aren't moving. So the real estate market is just going to slow down tremendously, especially transaction-wise. It just has to, right?
It has to. And we would love to move up. We've been here 10 years, right? So we're past the average of living in
Yep.
a home. We have 3 kids. We need more space. We have 1 living room. Like we want to get out of this house. It's 3,000 square feet, but it's all bedrooms and we've got to go. But I mean, our rate is like 3.75 or something like that. I mean, really? I'm going to go buy my $1,000,000-some house and pay 7% interest rate? And no way, it's not happening. So the move-up buyer is dead. There's nowhere for it, and that just kills everyone buying
Yeah,
houses
up the food
all the
chain.
way down the
Yeah.
line. Yeah, all the way down the line. Now, one thing I think is good for landlords and rental property owners is that we are going to get to keep some creme de la creme tenants longer because
Yeah.
there's no houses for them to buy. And with their rents going up because of supply and demand, they're not being able to save as much. This is so sad, but for a down payment for a property.
Yeah.
And so we're going to be keeping quality tenants longer. I think
Yeah.
most tenants will, leave 3 to 5 years,
Yeah.
I think they're going to stay longer as long as you're giving them a quality place to live. You're not pushing rents to the max every time there's a huge increase. So I think the demand for quality single family and small multifamily housing, maybe even apartments now at this point, is going to be such a stronger demand, and it's really important for us as
Yeah.
landlords to keep quality places and keep your good tenants in there because they don't really want to leave. They would love to buy, but they just can't.
Yeah, I think that is going to be one of the realities is renters are going to stay longer. Now, I don't expect rates to stay over 7%. That's my personal opinion for very long. I think we could be, sub 6 by the end of the year for sure. But who knows? I mean, for all I know, they could be 8% by the end of the year, right? My guess
Right.
is just that. It's just a guess. But
We, we, we don't,
one thing I know for sure with high rates like this, you're right, tenants will stay longer. They don't
Mhm.
want to get in, right? Why do I want to buy at high price and high rate? It just doesn't make sense. But one of the things that I will acknowledge because um, I like to buy rental properties. I don't think that's a great shock with a YouTube channel called One Rental at a Time. It's shocking, I know. Something I'm going to be watching is days on market.
Mhm.
Even though new inventory isn't coming, Some inventory is getting really long in the tooth. And I know sometimes you have to sell even in a bad environment. So I will acknowledge and say here for the record, I will be writing disrespectful offers on properties that are certainly 90 days over or maybe even 60 days on market. I'm going to go find that seller who's got to sell. I
Yeah.
did this in the winter between Thanksgiving and Christmas, bought 32% under list price when nobody was buying. I'm going to do it again. I'm going to focus on 90 days to start, maybe go down to 60. I'm going to start writing disrespectful offers because, Casey, I don't give a rat's ass about an
Yeah.
interest rate. I care about the yield. And if I got a high rate, it means I have to offer less. Am I off
Yep.
base?
No, you're absolutely right. And one thing I think is like before this little rate change that we just had, people were getting comfortable. So I invest in like sellers and buyers. Buyers were getting comfortable. Investor buyers were getting comfortable with the rate already, being in the sixes. They were getting comfortable with it. We were seeing multiple offers over asking in all the markets, the hot markets that my students are buying in across the country, not just
Yeah.
Memphis. And they're getting comfortable. And it's like, shoot, some of those other strategies weren't working as well to get offers accepted. It's like sellers are we're stopping to give you seller credits. They were not giving you, fixing things like they were more in the beginning of the year. Now it's back to kind of like last year when things were through the roof. And it's like, oh my gosh, so we have over asking multiple offers with these interest rates. What the heck?
Yeah.
And so now I think sellers are still expecting this price that they're going to get because this is what their agent has probably told them because of what's been happening since the springtime, whatever. But now with these interest rates being 7 to 8%, I think they're going to be really holding on to wanting that price, and it's going to sit on the market for a lot longer.
Yes.
So we're going to see properties sitting now because of the sellers, wanting that price, wanting that certain number. And with interest rates, they're just not getting it that they're going to have to drop it a little bit because people are just like, oh, heck no, something in the sevens, 8% interest rate. Nope. And I think
Yeah.
things will really start to slow down because we can get behind a 6%. All of us older people that went through the last market crash, I mean, 6%'s good. 6% interest rate's good. 5%'s good. Up to 7, I'm fine with that. Like, I feel like that's what I've been used to back then. It's cool. But now if you see 8%, even as old people are like 8,
Are you kidding me? Yeah.
no. And then my parents, they're 70 and they bought their property in the 90s for a 12-14% interest rate. So they're probably like, maybe they're like, oh, 8%'s not bad. I remember I bought my house for 12 and 14%. I forget which one it was. They had a VA loan a long time ago. And so, there's still that small crowd that might be like, hey, 8% still okay. But overall, I think that's going to like scare a lot of people.
Yeah, I think the longer rates stay over 7%, we're going to see two things. One is buyer demand is just going to drop off. Because
Oh, yeah.
less people can afford it, but also less people want to. Like you say, I'll just sign a lease again. I'll stay. I'll stay one more year. I'll see what's going
We'll
on.
wait. I heard
But I
rates are
also,
going to go down. We'll wait.
yeah, I think supply is also going to be impacted because you're going to have some people just take it off the market, stay put. You're going to have some people decide not to list. But again, as an investor whose job is to deploy capital, I'm going to go find those properties that are 90 days on market. I'm going to write a stupid low offer like Patrick Bet David says. And I don't know what the number is. 1 in 20, 1 in 40, 1 in 60 will say yes or something close.
Yeah.
And I'll close on that. And we'll just keep moving forward. So that's what I'm doing, Casey.
I think people that are going to be selling will be the more desperate, have to sell people, not want to sell,
Yeah.
but have to sell. So they will have to sell.
Yeah, exactly. So that's what I'm doing, Casey. People are watching you. Where should they watch you on Instagram and all your YouTube channel?
Yep. So Brick by Brick Wealth, that's where I am everywhere except for Twitter because that's too many characters. So it's Brick by BR Wealth. I'm like, should I pick something shorter? But you can also find me on my website, brickbybrickwealth.com, and you can get links to all my stuff there.
Awesome. Thank you so much.